Hello, everyone, and welcome to the Property Podcast. The gloves are off. Property, the long-established asset that we all know and love. Is it under threat? Is there a new kid on the investment block in Bitcoin? This week, they go head-to-head, and you might be surprised at the conclusion that we get to.
Welcome to the Property Podcast, where every Thursday property investors come to be informed and inspired. Today, we're picking up where we left off last week and talking about Bitcoin in relation to property and where Bitcoin could form a part of some people's portfolios. And make sure you stick around to the end because in Hub Extra, we've got loads more learning resources for you as well.
So this week's news story comes from the Evening Standard, and the headline reads, UK's eye-popping pace of recovery stokes staff shortages and inflation fears. Rob, what's the story behind the headline?
Well, this is from a survey that is showing the strongest growth in business activity for 24 years. Basically, lockdowns have been relaxed and people have gone out and been spending. And what business owners are reporting is that because of this extra demand and because of staff shortages, this is stoking up inflationary pressure. In other words, prices, talking here especially about hospitality, but probably more broadly as well, will be going up across the board. And Rob, the most chilling line in this story is the £8 pint, at least in London, is on its way.
That is very, very scary. I mean, I've paid over £6 the other day in a very average pub, so gosh, that's very worrying indeed. But not surprising. None of this is surprising. And actually, Rob, I can see us in a not too distant future doing a podcast around inflation, because all this activity should ultimately result in wage inflation and general inflation. So we've talked about inflation a lot over the long term previously, and I think it's an important subject that we need to come back to in the not too distant future. So hopefully we'll tackle inflation in next month's podcast, because this is not a news story that's going to go away. This is just the beginning of something that we all need to understand a little bit more.
So this is the second in our two-parter about Bitcoin. In the last episode, we talked about the basics of what Bitcoin actually is and where it fits into the landscape of cryptocurrency in general. It's funny, we were saying afterwards, we only scratched the surface, despite it being quite a long episode. There's way more that could be said about that. But hopefully we gave it enough of a setup for you to get the most out of today's episode, which is about, should you own Bitcoin? Is it something that could form part of your investment portfolio? And how does it compare to other assets that you could invest in? Obviously, whatever we say is just our opinion. And in any case, we're not going to be able to give an answer personalized to you. But by talking it through and giving it some thought, even if you decide that Bitcoin is actually just not for you, not something you're interested in, it'll make you think about property in a different way, which is what this podcast is normally all about. So Rob, as a starting point, at the end of the last episode, we were talking about Bitcoin in relation to gold, making a comparison there. So maybe recapping the similarities between Bitcoin and gold is a decent place to start.
It is. It's the perfect place to start, because today that's how we're going to base our episode, is that accepting that Bitcoin could be seen as a digital gold. So why? Well, there is a limited amount of Bitcoin that will be produced, and there is a limited amount of gold available. You can't just create new gold and you can't just create new Bitcoin, but you can create new dollars or pounds. You just call it something fancy like quantitative easing and you get away with it. So the reason why people like gold and some people like Bitcoin is they see it as a defense strategy against fiat currencies. And fiat just basically means it's a currency that has an unlimited supply, because if a government wants to make more of it, they can do. But when governments make more of their currency, they often then create inflation. And therefore, the currency becomes worth less and less over time. You can't buy as much with it. So take a pint of lager, and I've been partial to one or two over the years. Now, these days, in the southeast anyway, it's very easy to be paying over £5, and in some cases £6 for a pint of lager. I know, crazy, right? But that same pint of lager 10, 20 years ago, at some point in time was £2. And at some point in time before that, it was less than £1. What has not changed is the pint of lager. A pint is a pint. Nothing's changed there. So the good you're consuming is exactly the same, but what has changed is the value of your currency. It's not worth as much. So you have to spend more of your pounds to buy the same thing, and that's inflation. So people like gold and Bitcoin because there is a limited supply of it, so it acts as a defense against inflation. Now, Rob, there may be some people listening to this who will challenge the assumption of Bitcoin is like gold. because people will say, well, gold has some uses. But there are other limited asset classes that have uses that aren't as valuable as gold. And you could say, well, what is the value of Bitcoin? Well, the value actually lies in its trust. The trust that people see it as an asset class, see it as gold. But gold itself, like if we're getting deeper with this, gold is just a rock. Why is it valuable? It has some practical use, but the reason why it's at the value point it is because people trust in it as a place of holding wealth. But if that trust evaporated, then so would the value of gold and Bitcoin. But actually, you can take it a step further and go, well, why do we believe in the pound or the dollar? Like, why do we accept that as currency? Why do we trust it? Well, you can ask yourself why you trust it, but ultimately enough people do trust it, so therefore it's accepted. And what fans of Bitcoin would say is that one day the masses may no longer trust currency, fiat currency at least anyway, and Bitcoin is a hedge against it. But with a lot of asset classes, Rob, the reason why they are valuable is because there's a consensus, a majority consensus, that trust and or believe in a currency or asset class.
That's exactly it. Just because something is scarce doesn't necessarily mean it's going to have value. The technology behind Bitcoin is open source, right? So I could take the Bitcoin technology, call it Robcoin, and start issuing it and say, look, there's only going to be 21 million of these. You need to get in on this now. Just because there's this thing that I've created that has all the same properties of Bitcoin, has all the same scarcity, doesn't mean it's ever going to be worth anything. Not something you'd want to invest in because it doesn't have trust and adoption from millions of people. So Bitcoin's not there yet, but it's by far the furthest ahead of any cryptocurrency. It's trusted by millions of people. And so that consensus is developing. So gold's got a head start of a couple of thousand years. If either gold or Bitcoin is going to go to zero, what's it going to be? You'd say it's going to be Bitcoin, right? Because it's only been around 10 years. Gold's been around thousands of years. It's just got that belief built into it. But belief is really all it is. You need the scarcity that gold has got and Bitcoin has got, but you need the belief as well. It's when you put both of those together and you get that collective belief of, okay, this is a good store of value, this is worth taking some of my cash and putting it into, that's when you get something that actually becomes something and that sticks around. And like you've said, the pound, well, what's that? There's nothing special about it. It used to be backed by gold. It used to be that if someone gave you a banknote, you could walk down to the Bank of England, hand it in, and be given a quantity of gold in return. Because people trusted gold, that was used to back the currency. That was done away with a while ago. And now, if you look at it logically, like take aside the fact that it's the only currency you can pay your taxes in and all that, the pound is a far worse form of money than gold or Bitcoin because any amount of it can be created. There's no scarcity whatsoever.
So for at least the rest of this episode, let's accept that Bitcoin is a digital version of gold. Let's look at it now against property. Now, this is the Property Podcast. And while we try to be impartial and question ourselves as we go through subjects like this, I'm sure that deep down our biases will play out. So you have to do your own research and decide if you agree with what we're about to say. But whether you look at Bitcoin or gold, there are clear differences. And there's a reason why this podcast will remain the Property Podcast and not called the Bitcoin Podcast. And there's a reason why if we both have Bitcoin as part of our investment strategy, it will be a minor part compared to property. But why? The why is more important here rather than what we actually do. Well, the first why is all about inflation again. Now, Bitcoin and gold are a great defense against inflation. But sometimes you can defend and sometimes you can attack. And property is more than a defender against inflation. It's an attacker against inflation. It actually benefits the more inflation plays out. It does better and better. And that's for two reasons. It doubles up because as an asset class, property goes up in value because it's inflated. Quantitative easing takes place, assets go up in value, including Bitcoin and many others, and property absolutely benefits. And that's not the only reason, but a big driver behind the recent price rises. And we talked about that in some depth over recent episodes, around the property boom episode in particular. Go back and listen to that if you have missed it. It's really important. So property wins there. So does Bitcoin and so does gold. They're all asset classes as well. Where property doubles up is when you leverage. Because when you buy a property, most investors or property owners will use a mortgage. Now, when you buy a buy-to-let property, you nearly always go with interest only. So going back to that pint of lager example before, if you buy a property for £100,000 and you have a 75% loan-to-value mortgage on it, that's 75k. But 75k in 10, 20 years' time, the number will be the same because you've got an interest-only mortgage. So you've not paid anything down. But the value of that 75k will be far less. In the southeast of England, anyway, you'd probably be paying that for a pint in 20 years. The point is, the value is being eroded. So your asset is going two ways in your favour. It's being inflated in value because of inflation, but the debt you've taken out to buy that asset is being devalued at the same time. So you get a double whammy.
Exactly. If you've got cash in the bank, you suffer from inflation. If you've got gold and gold's doing its job, then that is a defense against that. If you leave your money in the bank for 20 years, you're going to have far less purchasing power at the end than you did at the beginning. That's because of inflation. If you put your money into gold and take it out in 20 years, if it's done its job, then your purchasing power should be the same. But property benefits from inflation. Part of it is the debt aspect, which you talked about, Rob, which I think is really important. And the other part is that property is a scarce asset. And therefore, even if property isn't doing anything special, over the long term, its value would be expected to go up with inflation. Or another way of putting it is that the value of the currency will go down and property will stay in the same place. It's the same thing, it's just a weird way of looking at it. But it still very much is an asset that benefits from inflation. The other big benefit of property is that it pays an income. So gold doesn't pay an income, Bitcoin doesn't pay an income. It's a place that you go and put your money in the hope that your purchasing power will be maintained, but you don't expect it to make you any money. With property, it's a real asset, it's a scarce asset. It's also got practical value. People need somewhere to live and they'll pay you to live in your property. Even if it suddenly became illegal to make a capital gain on property, you'd still make rental income because people would still want to pay you to live there because they need somewhere to live. And the other great thing about it is that income stream, generally speaking, would be expected to go up in line with inflation because the dynamics of the rental market are such that as people get paid more, and people are competing with each other for the best properties, generally speaking, there is a set amount of people's income that they're willing to allocate towards rent. And therefore, as wages go up, rents go up. So I don't want to get into bonds in any great length because that's another giant topic that is just going to confuse things a bit. So if you buy a bond and it's paying you a fixed amount of interest over the years, in real terms, that will become worth less and less and less because of inflation. Whereas with a property, the income stream is not static. That will go up in line with inflation. So unlike some other asset classes, property pays an income, and unlike some asset classes, that income stream would be expected to maintain its purchasing power even in the face of inflation.
Now, we keep referring to Bitcoin as a digital gold, which for a lot of reasons we've discussed is fair, but actually it's not digital gold yet. And why do we say that? Well, look at Bitcoin. The reason why we're talking about it right now is because people want to understand it. And why do people want to understand it? It's because it's getting so much attention. And why is it getting so much attention? Well, because the prices are all over the place. You're seeing huge gains. Then you're seeing huge drops, then huge gains again. And sometimes the price of Bitcoin can drop and rise by double-digit amounts in the space of minutes. Now, gold doesn't do that. So while a lot of the core properties of both assets are similar, because so many people are speculating with Bitcoin right now, it's a lot more volatile, which for some people will put them off, and for others, it will attract them because they'll want to make money quickly. So while people invest in gold as a safe place to store their money, Bitcoin at the moment can't be described as safe as gold. We've already talked about how gold has the history. Gold is well known. And I know there'll be crypto advocates listening to this getting quite cross because they get so passionate about crypto and its potential and why it's better than gold. And I feel we've covered enough reasons to see why its potential is better than gold. But what can't be denied is its volatility. And it's not recently that's been volatile. Through the history of Bitcoin, it's been volatile. So when we look at our investments, for me, and this does mean it needs to be for you listening, I look at my investments as attack and defense. I have more attacking interests in my portfolio than defensive. So what do I mean by that? Well, I've already talked about how property is my main asset class of investments. That's what I do invest in most of. But I also own some stocks. I also own some gold. But the majority the vast majority is in property. Now, some people will say you shouldn't put all your eggs in one basket, but I feel that I understand the asset class enough to be comfortable with that allocation. And I see property as my attacking asset because it benefits from inflation, my debt is eroded over time, and I get a rental return. And it's an asset class that's been around for hundreds of years that we know and understand, and it's very safe and secure. And the need for property isn't going to go away. So for all those reasons, property remains my core investment, and it will do unless something dramatically changes. So that's property. I have some stocks and some gold, and gold in particular, as a defensive play. So I don't have all my eggs in one basket, and I have a holding in gold. Nothing to write home about, but I have one. And I can also see as a defensive play and something I probably will invest in as a riskier gold. So my holding in Bitcoin will be less than gold. Now, it's up to you what you do. You may see it as too risky, too volatile for you to invest in at all. Or you may feel like you want to get in a bit more than what I've talked about. But if you look at an attack versus defense investment strategy, if you're in an attacking mode, so wealth creation mode, then for me, property is the stronger bet. If I ever put my investment strategy to a defensive mode, therefore I've acquired enough wealth that I don't feel like I need to keep accumulating and I want to defend it a bit more, then my asset spread will probably mix up a little bit more. I'd probably invest in a bit more gold and also a little bit more Bitcoin as well, because Bitcoin is my defensive play if there's a new world order and currency as we know it today isn't respected anymore, and there is a new accepted currency, and that could be Bitcoin. Now, while that could happen, I'm not saying it will happen. The collapse of currency as we know it is a big call. Who knows? But if you've got any meaningful wealth and you don't have some defensive play against that happening, then I think that is possibly reckless in itself. You should defend against all scenarios. So you really have to decide where you are in your life. Are you in an expansive mode of wealth, or are you in a defensive mode of wealth? Are you trying to protect what you've got, or are you trying to grow it more? And everyone listening will have their own answer. And for some, it might be somewhere in between. But based on that, you should adjust your investment strategy appropriately. Now, there'll be IFAs listening to me who may disagree, and that's fine. Remember, this is our podcast. This is just our views, and this is how we want to do it. You can decide what your version of this is. This is not direct investment advice to you, because we don't know who you are, because there's lots of you listeners, and you'll all have different needs and wants. But by telling you how we approach things, we'll hopefully then give you inspiration and ideas on how you can approach things.
Yeah, I completely agree with all of that. That is how I see the world as well. And Bitcoin is in this really weird point at the moment where it is super volatile. If you go to bed, you have no idea what it's going to be worth when you wake up. And that is not something you want as a defensive asset. That's not an experience you get with gold. So that analogy is more about what it's likely to be like in the future. Why would Bitcoin become less volatile? Because that's a natural feature of an asset getting wider adoption. As there are more holders, the volatility will calm down. It actually, believe it or not, has become less volatile over time already, even though it doesn't feel like it. But it's just logical. Like if you've got something which is held by 10 people and one of them's got a big position and they dump that position, then that's obviously going to affect the price far more than if there were 1 million holders. So Bitcoin is in the strange place at the moment where its place in the world is likely to be a defensive asset. But if you're investing in Bitcoin now, you're not doing it for a nice, calm, easy life. Certainly not. You're doing it because of what you believe it can turn into in the future. And I think that leads nicely into a little roundup of like why you would and why you wouldn't invest in Bitcoin. So why would you do it? I think there are two main reasons why most people do. One reason is that you believe in the technology. You think this technology is going to make an impact on the world. Maybe it's not going to take over as the dominant world currency, but you think it's going to do something because it is so much better than everything else that is out there. It's therefore something you want to have a piece of. In other words, you kind of see it as like an asymmetric bet. So there is some chance that Bitcoin will end up being worth nothing, but there's also some chance that it's going to end up being worth a heck of a lot more than it is now. The risk of it being worth nothing decreases with every passing year and as its adoption grows, but that risk is still there. So if you invest it now, you need to believe that the probability of it being worth a lot more in the future is greater than the probability of it being worth nothing. Therefore, it's something that you're willing to take a risk on. Another reason that people get involved is something that you touched on, Rob, which is that it's a kind of a protection play. So if the dollar or the pound collapses, it's not likely at the moment, but if it does, then it's some kind of protection from that. It's something that no one can get at. That event in Cyprus where the government decided it was a bit short of cash and it was just going to take money out of people's bank accounts, that can't happen. If I was a billionaire, I would absolutely stick, 50, 100 million or something in Bitcoin just as a security play, just to cover that downside. And it would make no difference to my life because I'd still have so much money to spend. So those are a couple of reasons. I think another reason to get involved is it's just kind of fun. And it's not going to be fun for everyone. There are some people who find new things a bit scary or off-putting and it's just not their thing. But personally, I just find it really interesting. I find that the best way to learn about something is to have like a really tiny position in something, just because you get to learn what it's like. And you learn far more from doing something than you do by just hearing about it. So those are reasons why you would get involved. But there are reasons why you wouldn't get involved as well. And Rob, for me at the moment, the big one is the volatility, because some people are just not going to want to go on the ride that Bitcoin is providing right now.
No, I know people who are investing who have a few £1,000s in savings. That's their entire pot of savings. And they're investing a significant amount of that in Bitcoin. And they are getting stressed out by the ups and the downs. Like when it's up, they're super excited that they've added 25% to their net wealth. But conversely, when it's down 20, 50%, which, it can happen, it has happened multiple times, they're then really, really nervous. That's what worries me, is that the masses are playing around with Bitcoin and some people are playing around in a way that's meaningful to them. And while some people can listen and put a few £1,000s in and that's not going to hurt them if it goes up, down, sideways, but it's interesting. And if it does drop, they can hold and see it through. For others, that can be make and break stuff. And that makes me nervous that the people who are getting most excited by this are the masses and people speculating. And for that reason, that's why I've held off for so long. Even though it's gone up over the long term and it's done well so far, it's the hysteria around Bitcoin that I just felt a bit off-putting. However, since I've decided to go on a bit of a learning journey around Bitcoin over the last weeks and months, and I've really come to appreciate the complexity of it, it's a beautiful complexity and it's super interesting, I do want some exposure, as you said, Rob, just to learn and develop that interest more. And if we ever got to the heady heights of billionaire status, yeah, I would do exactly as you said, Rob. I would absolutely put a reasonable chunk in as a defensive play. At some point in life, some of us are lucky enough to get to a point where our wealth creation strategy becomes defensive rather than attacking. And that might be because you've done really well. It might be because at a certain point you are in life and you just don't want to take any more risks, whatever it might be. And I think Bitcoin can be a small part of that for most people. But I do think it should be a small part for most people, not a big part for many people. So therefore, Bitcoin overall, yes, I think it is interesting. And for a lot of people, I think if they invest a small amount in, yeah, they might lose it. But if you can put enough in that you're happy to lose, then you can't be unhappy if you do lose it, but you might be happy if it grows. But using Bitcoin as your big bet on your financial future is very dangerous.
So I think there's a good chance that we've probably upset a large number of people over the course of this episode, because some people will think we're irresponsible for even talking about Bitcoin because it's a scam and blah, 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 and why would we even give it any airtime? Then the real crypto enthusiasts will think that we're idiots who are missing the point by not putting everything and more into Bitcoin and even countenancing the existence of other asset classes. Well, I kind of hope that is the case, because if we have done that and offended all those people, then that means we've been reasonably balanced and given you a decent context for where Bitcoin could fit into a portfolio. If you are somewhere in the middle and we've done that job for you, then, well, it's Hub Extra time and we've got some resources to help you advance your Bitcoin knowledge further. I think the first thing to say is that, like we've already said, the best way to get started is to just get involved at a very, very, very small level, like where you wouldn't care if you lost it all, just to see what happens. So the easiest place to get started is just to buy some on an exchange like Binance or Coinbase or something like that, just to go through that process. But then be aware that once you've done that, it's not properly decentralized. You're still trusting that exchange to hold your Bitcoin. So the next step from there is to work out how to transfer it from there to a wallet that you control, and you get to learn about the security piece. And there are loads and loads and loads of YouTube videos about how to do all of that. So if you just search YouTube for something like Bitcoin getting started or Bitcoin beginners or something like that, you'll find loads of videos. And for me, that's the best way to learn about that kind of thing. If you then get really into it and you want to take your knowledge further, then we've got a few more advanced YouTube channels for you as well. So there's BitBoy Crypto, there's Coins Kid, and then there's Altcoin Daily if you want to start getting into cryptocurrencies beyond Bitcoin, which is where our focus has been for these 2 episodes. So we're going to link to all of those in the show notes for this episode. So that is us done for this week. Hope you've enjoyed this episode. I've really enjoyed it. I've really enjoyed getting into the sort of the philosophical side of things a bit more. And that's what I find really interesting about Bitcoin. It's not just necessarily the thing itself. It's about how it gets you thinking about money and investing in general. I find that really exciting. So hope you've enjoyed it. But next week we are back to pure property. So make sure you join us for that one. And before that, we'll see you on Tuesday for Ask Rob and Rob. So we'll see you then. Bye-bye.
Bye-bye.